Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is Wednesday, August 7th. We're going to take a look at one out of the industrial sector. This is a specialty manufacturer here, Emerson Electric. Now before we get too far in the video, if you could do me a favor and hit that thumbs up button down below if you are a dividend growth investor and if you find value in the content, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. A lot of you out there watching the channel are not subscribed. Actually, the majority of you out there watching the channel are not subscribed. So hit that subscribe button. It really does help out a small YouTube channel like mine with the YouTube algorithm. Make sure you hit that notification bell as well. We do these Stock Pick of the Day videos Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day to see if it's showing any value. We run through a screener. You'll see the screener here in a minute. And also make sure you drop a comment down below so you let me know what you think of the videos. Let me know what you are investing in right now. What are you buying? What are you adding? What are you selling? A lot of selling going on in the market right now. We got a pretty good day yesterday, but Monday was a big drop. Looks like a lot of drop this today as well. So let me know what you are doing. What's going on in your portfolio? Are you making any changes? What are you adding? What are you selling? Would love to hear from you, and really appreciate everyone out there who has taken the time to do that. Again, doing all that and watching the videos to the end really does help out with the YouTube algorithms, help spread the videos a little bit further. And a very special thank you to the subscribers out there. The channel continues to grow because of people like you. Over 1,000 subscribers now, and help me get to 5,000. We're going to keep growing with your help. Now this is the Vested Interest Stock Screener. This is how I set up the videos. This is how we're going to run through the videos. Also how I look at a company on a high level to see if I want to add it to my watch list and do more of a deep dive into the financials. It's also how I back check companies that are already in my portfolio to make sure they meet some of the initial criteria that I reviewed whenever I first added them to my watch list. And then if they don't, I want to do more of a deep dive into their financials and see if they are still worth keeping in the portfolio. You can tweak this screener. Don't blindly copy anyone's screener or investing strategy. We are all at different levels in our investing, different ages or length for retirement. You might be 20 years, 30 years, 40 years from retirement. I'm in my mid 40s, so I'm hoping to retire within the next 10 years or so, maybe even sooner, depending on how the portfolio goes. Some of you, again, might be in your early 20s or late teens or 30s and still have 20 plus years to go. Nothing wrong with that. Just means you should have a little bit of a different investing strategy than someone who's at retirement, close to retirement, or in their mid 40s like myself. So don't blindly copy this screener, but you can tweak it, add to it, take away from it, use it as a starting point. No problem with that. Now it must meet 5 of 8 to I say be investable, but I really need to change that to be on my watch list, to make it on my watch list. Just because it meets 5 of 8 does not mean I'm running out investing in it. It means that I'm adding it to my watch list and doing more of a deep dive into the financials, taking a look at stuff like growing. I want to see growing revenue. I want to take a look at their margins, make sure their margins are expanding. I want to make sure they're paying down their debt. Do they have more assets over liabilities? What is their PEG ratio? What is their price to book? I like to look at that for all companies. I just use price to book specifically for banks. That's why it's highlighted in green here on the bottom as part of the screener for banks and insurance companies. If you do use it for other companies, price to book is fine. Just make sure you compare that company's price to book with other companies in the same industry and in the same sector. Let's continue on here. Back to Emerson. www.emerson.com is the homepage where I pulled this information from. That's www.emerson.com. Again, that's their homepage. Go check them out there if you want to know more about this company. And you really should start with any company at their homepage. Understand what products they make, how are they making their money. There's usually an investor page where you can get some information about the company, but understand what products they are selling and how they are making their revenue. Solving the unsolvable. At Emerson, we believe in innovation built for and with our customers. Throughout our 133-year history, we've been inside every kind of business, working with our customers to overcome complex challenges, seize opportunities, and achieve ultimate performance, powered by our comprehensive integrated automation portfolio and backed by our proven track record of execution. We are solving the unsolvable. And that doesn't really tell you a lot. But really, they are pairing with other companies in a multitude of industries and then custom tailoring a solution for them, whether that's their manufacturing process, building automation systems, could be software. So we'll kind of look through this. They have their hands in the automotive sector, life sciences, oil and gas, water and wastewater, chemical, marine, packaging, electronics, medical, power generation, food and beverage industry, mining, minerals and metals, pulp and paper industry. So they have their hands in all these different industries, and some of the things that they are helping with are it might provide you a special process for your actuators, control and safety systems, operations management software. If you have a building automation system, for example, valves. If you're a manufacturing plant that has multiple mixing operations, you might have different valves in there associated with that. Advanced industry software. So your industrial, like you're an automotive company, for example, you might have different software out on the floor that they would help you with. Electrical and lighting is just what it says, electrical and lighting, right? That's manufacturing companies' lighting or automotive manufacturing lighting, that sort of thing. Professional tools and vacuums, welding, assembly, and cleaning. So they might set up your welding automation process, asset performance management, industrial factory automation. So there's back to automation, right? You might have a bunch of robots set up in different spots doing different tasks. Regulators, automation software, measurement, instrumentation, test, and measure. In the Air Force, I actually did what they called agent surveillance. We did a lot of testing of stuff like rocket motors, ICBMs out in the backside of Salt Lake at Utter Test Range. We tested all three stages of the ICBMs. So I was familiar with some of the test and equipment that we use in different processes and procedures for those. We even tested batteries and stuff like that. The little actuators that unlock the hands, the little feet that hold in a pilot's seat before he ejects. So when a pilot pulls the little lever below his seat, there's actually these little, we call them like little shotgun shells. They're very small, actually much smaller than a shotgun shell, but they have a little bit of powder in them that basically blows open those arms so that the seat can be ejected, right? And same thing with the canopy, right? There's these little actuators that blow open the canopy so that whenever the pilot ejects, they don't hit the canopy, right? So test and measurement, I'm very familiar with some of the stuff that we use in the military. We cold soaks, where we cold soak would mean like you put something in a freezer for, till it drops down to negative 20 degrees, you're simulating, or negative 40 degrees, you're simulating like an Alaskan environment or in the Arctic or Antarctic environment. And then other ones we put in an oven and heat them up to 120 degrees. These would be like Mark 59 rocket motors. We do 10% of a lot cold soak, what we call cold soaked. So again, negative 20 to negative 40 degrees. We do 10% of a lot heated up in an oven to 120 plus degrees. And then we do ambient temperatures as well, which just means room temperature, usually around 70 to 75 degrees. So I did a lot of test and evaluation in the United States military, in the Air Force. Again, we call it agent surveillance because you take stuff that had been on the shelf for 20, 30, 40 years. That's the age, usually towards the end of its shelf life, really close to the end, or even past its shelf life, maybe that we extended previously, and you're testing 10, 20, 30% of it. And then based on the testing data, the engineer can say it still meets specs, or we have to remake that lot. Might be able to extend a rocket motor's life by 10 years, 20 years, whatever the drift is. They look at the drift from what the original design was to where it currently sits. So I'm getting off on a tangent there, but that's what I did in the military. Part of what I did in the Air Force. Now, jump back over to Emerson Electric, ticker EMR, out of the industrial sector. Closed out the day at $99.54, down 7.65%. Huge drop on the day. You can see that drop. Looks like they tried to recover a little bit in the morning, and there it goes whenever the pre-market, looks like it actually dropped in the pre-market, tried to recover around 8 a.m. Then from about 9:30 on, it was just a pretty straight drop there. 52-week range as low as $83.10, as high as $119.53. They need to drop down below 95 to be within 15% of their 52-week low. So they're getting close, but they're not quite there yet. Market cap of $56.947 billion. Let me try that again. Market cap of $56.947 billion. A beta of 1.32, so they are more volatile than the overall market. You can see that volatility right here throughout the day. PE ratio seems a little elevated in my opinion, 29.63, $29.63 per share. That's a little high in my liking. I like, really under 15%, under 18%, depending on the company. You start getting into the 20% range, that's usually high growing tech companies. That's where you're at with that, or high growing companies in general, right? EPS sitting at $3.36 per share. Earnings date August 7th. So their earnings was today. I'm assuming some negative news around their earnings. Looks like they're actually down a little bit more in the after hours whenever I pulled this up. But I would go check out their earnings, see what they're saying. They must have missed either on the top line or the bottom line, or their forward projections were decreased or just not good. For dividend, $2.10. They are quarterly payers, so divide by 4, though we will see that towards the end of the video. Very low starting dividend yield, 1.95%. Ex-dividend date, May 16th. Looks like they paid out June 10th, so you would be in line for the next dividend if they were to, whenever they pay that out, but you're going to have to wait a couple months. 1-year target estimate, at least according to Yahoo Finance, $131.29. So they see some upside as far as price appreciation here. Let's jump over to the right. We're going to take a look at dividend yield theory to take and see if this one is presenting any value. To do that, we take a look at their 5-year dividend yield average, 2.45%. We compare it to its current 1.95%, or over here where it says forward annual, 1.95%. And since it is lower than their 5-year average, that speaks to overvaluation. According to dividend yield theory, this one is potentially overvalued. I like a payout ratio under 75%. They're sitting at 62.2%, so good there. Again, we went over the ex-dividend and dividend date. Now let's jump down and look at free cash flow. I like growing free cash flow. Typically, if a company has growing free cash flow, they have growing dividends to match. 2020 here, you can see they had $2.5 billion in free cash flow, jump up to 2021 to $3.1 billion. 2022 was a drop back to 2.6, and 2023, very bad year. It looks like $274 million. Although, let's look at this next line up: repurchase of capital shares, $942 million in 2020. 221, 500 million, 2022, 500 million. So definitely a drop from 2021 to 2022. Same repurchase of capital shares, but a drop in free cash flow. So definitely a drop there. Now you'd have to do the math in 2023. This 2.2 billion repurchase in shares could indeed account for the free cash flow loss here, because they really jumped their repurchase of shares up. They must have thought they were significantly undervalued and really increased that repurchase of shares, which I like. A company that's taking shares out of the market, it makes you more of an owner, even if you don't add additional capital. Now, stockanalysis.com is another source that I like to go to for information. The previous slide was Yahoo Finance. I am not affiliated with either source, and I always recommend more than one source of the internet, a magazine, wherever you're going to for your information. Make sure it's more than one source, so you make sure the information you're getting is accurate and up to date. Now, I don't know that many people get their information from magazines anymore, but maybe some of you out there are. Now, they have 17 stock analysts that have taken a look at this, and if you were to go to their website, you'd be able to click on each one of these and see how many would say it's a strong sell, a hold, a buy, or a strong buy. I did that whenever I looked. I think there were 3 out of the 17 that called it a hold. No sells, no strong sells. Everything else was a buy or a strong buy. General consensus is this is a strong buy. I will reference down here, though, price targets were last updated July 8th, right? So we're about a month outdated from that. It's not terribly outdated, but it is a month old. Now, they have a low estimate of $105. It currently sits lower than the lowest estimate, so if it came back up, that would be a 4.87% gain. Average estimate of $123.88 would be a 23.73% gain. And if it happened to hit their high of $138, that would be a 37.83% gain in the stock price. All the while, you could collect that 1+% dividend yield. I like to look at statistics, and we're going to look at ROE and ROIC. That's return on equity and return on invested capital. This tells us how efficiently a company is reinvesting its capital back into itself. Return on equity, and I like 10% or better for both of these. Return on equity, smoking high, 51.9%. Now, return on invested capital is a little low at 6.46%. So it would not get a check because it's only one of 2. Now, I may split these up in the future, but for right now, I'm keeping them tied at the hip because it's basically looking kind of at the same metric, just a different way to look at it. Now, EPS growth, I like forecasted 5% or better over the next 5 years. They're sitting at negative 19.9%. So maybe that's part of the reason they had a drop today. Anytime I see negative EPS, I don't like that. It means that they might be having some trouble growing their earnings per share in the future. Definitely, that would be a significant trouble, actually. But their revenue growth is forecasted at 8.28%. So I do like that. Let's jump it and look at dividend history real quick as we wrap this one up. Quarterly payer, as we said, low payout ratio, 11.22%. I like under 75%, so they are very low payout ratio. Dividend growth of 0.96, so they are growing, but very slow. 67 years of dividend growth. Buyback yield, negative 0.09. Shareholder yield of 1.96%. As you can see here, going back to November 2021, they were paying 51 cents and some fractions of a penny. Jumped it up in November 2022 to 52 cents. Jumped it up again November 2023 up to 52 cents and some fractions of a penny. And I'm assuming if they continue this dividend growth, November of 2024 will be their next dividend raise. They do pay out on the March, June, September, December timeframe like most companies do. Let's jump back over to the screener here. So understand the business. That's where we start. Almost every company gets a check. Unless they're really hard to understand, they almost all get a check. So that's almost a gimme. Growing free cash flow, no, we had the down years there in 2022, and unless you do the math, possibly in 2023, though I believe the repurchase of shares accounted for that. Growing dividend, yes, very slow growth, but it is growing. Dividend ratio 75% or less, yes, it is. Dividend yield theory says it's potentially overvalued, so no check there. It is not within 15% of a 52-week low, though it is getting close. Under $95 would put you in within 15% of a 52-week low. Return on invested capital and return on equity, it got one of two, right? Return on equity was good, but return on invested capital was under 10%. Return on equity was actually very good at 51%. Earnings per share growth is negative, so no check there. So it only gets 3. It would not make it on my watch list. Let me know what you think of this one. I actually did look at price to book. It was not under 1 either. But again, for companies that aren't banks or insurance companies, you'd want to compare the price to book to other companies in the same industry or in the same sector. Don't blindly use the one number. That's for banks and banks only. Or like I said, some insurance companies. Well, that is really it for this one. I know this one went a little long. I got into some military stuff there, history of mine. Hopefully that didn't bother you too much or you skipped over it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a company like Emerson you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section below, and I'll work it in the rotation. I do have a couple in there right now that I'll work in over the next week or two. So appreciate those suggestions out there for those of you who made them. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for tuning in. Thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of the certified financial advisor.